In VAT, we have output VAT and input VAT. Output VAT is the VAT you charge when you sell a product or when you offer service. You charge and collect and remit to government. Then input VAT is that VAT you suffer when you purchase raw materials or purchase goods for production or for sale. I'll give you an example of what we call input-output VAT adjustment. Now, if you buy a goods 800,000 and suffer 7.5% input VAT, it means you have suffered 60,000 naira from the 800,000. If you eventually sell that goods at 1 million naira, you are supposed to charge VAT at 7.5%, which is 75,000. Now, when government comes to you, you are not supposed to pay government that 75,000. What you are going to tell government, I've suffered 60,000 when I was buying my goods as input VAT. So I'm going to remove 60,000 from the 75,000. So the balance of what they are going to pay to government becomes 15,000. So this is what we call input-output VAT adjustment. When you are buying the product, you will charge VAT. It's going out from you. But when you are selling, you are collecting from people. It is not you. Now you are collecting from people. That is why when you are buying it at 800,000, for example, you suffered 7.5%, which is 60,000. Now when you are selling it, is the man you are selling you are supposed to collect from. So what you are supposed to collect is 7.5% of the 1 million, which is 75,000. So now government will ask you, where is 75,000 naira? You say, I have it, but I've already suffered 60,000 when I was buying these goods. So if I remove 60,000 from this one I have collected, what our balance government is 15,000. So that is the adjustment. Now, once you be able to show the revenue authority the evidence of what you have suffered, they will grant it to you. Input VAT is claimable. Even on zero-rated VAT, in zero-rated VAT, your VAT you are supposed to charge is zero. You are not supposed to collect. But if you have suffered in input VAT, you claim it. So input VAT is claimable. The problem we have in Nigeria is that most people cannot claim because they cannot show evidence of input VAT they have claimed. Let me give you an example. I normally tell some of hotels I consult and some eateries, say if you want to buy drinks, go to ShopRite, go to Next Cash and Carry. So when you buy, you discover that there's evidence that they have charged you VAT. So you keep it as an input VAT. So when you sell, when the FRS comes to check what you are doing, you bring those things as an input VAT. You suffered when you are buying them, and they will grant you the input VAT, and you pay the difference between the input and output. That's called input-output VAT adjustment. My name is Dr. Kennedy Iwundu. I'm a forensic accountant. If you have a limited liability company and your company has paid tax, don't assume that you have paid your tax. In the Constitution of the Federal Republic of Nigeria, tax is compulsory.